Good morning, everybody. It is January 22nd, 2021, and we were just talking about a few things off air that I thought I'd start up with here. First off, Fundamental Trends is finally rebuilt. It took a month and 4 developers and twice as much money as I thought. But at the end of the program, we will go through Fundamental Trends, navigating it a bit. And I will do a separate video for that and post that to YouTube and put a link on Fundamental Trends to make it real easy for people to get around. I know there's just a handful of issues left with the logins for certain people. In every single case so far, that has been solved with a password reset and clearing your cache. So if you're having a problem logging into Fundamental Trends, clear your cache and history completely, or you can selectively get rid of everything that's been Fundamental Trends related. You'd have to go through your history to do that and check the boxes and drag down. I'll show you how to do that at the end. But the website's working, the menus are working, the content is working. I added some stock picks, and I've got about 30 more stock picks coming, or at least stock evaluations. I hired a copy editor / editor. So she'll be starting next week. So everything that I write at Seeking Alpha, from the free stuff to that's behind the paywall at Margin of Safety Investing, will be on this website in the future. All my Seeking Alpha articles will be down here in the free library card section. So if you don't want to pay Seeking Alpha for a premium membership, at least my stuff will be on Fundamental Trends behind the free library card / paywall. It's technically a paywall, but it's free, and you'll be able to get that. One of the things I'm having the copy editor do is I'm taking blurbs from what I think are some of the best articles on Seeking Alpha and around the web. And it's not just Seeking Alpha, it's 100 different websites and whatnot. I'm finding the best things in research that I can find, incorporating them into our content. So then when I write about something, I will give you a blurb. Usually it's a copy and paste picture that is maybe something that supports what I say, and sometimes it'll be somebody saying, no, it could be this instead. So I'm going to give you both viewpoints, and then I'll give you my conclusion. You make your own decision. In most cases, if you go back historically, even the stocks that we didn't buy in the last year, but companies that I talked about, you go through probably 20 or 30 stocks that I mentioned early last year after CES, and you go, wow, I mean, some of these stocks doubled and tripled. So it was a matter of pulling the trigger in many cases. And I think that the stock market is going to have significant volatility this year. The presidential cycle generally means that the first year of a presidency is where you get the most volatility. Before, of course, they have their programs in place and they start jamming things into the economy to make it do better as they go into re-election. So those articles, when I pick a stock related to what's happening in the economy and we're getting our opportunity, will be down here in the recent members only content section. So you go here and you see that yesterday I put out a stock buy alert for a big SPAC. It's a little bit speculative, but I think there's a lot of downside protection with the way it's structured and a lot of upside with some warrants. We'll talk about that later. There's another stock here that I'm actually, there's 2 stocks in this article that I'm recommending that have to do with a play on global subscription growth and then the reopening when it happens. We took profits on Invesco this week. Some people doubled their money. I think most people made 30, 40, 50%. So that was good. The chart books are here, plug and play stocks. So this scroller will be the members only content, but it's very easy to get to the members only content up here. Just pick your subscription. And what I'll do is I'll show you the login. So we go to the login, it'll pop up for you, put in your ID, and then you can see your membership. Okay, so this ID has access to everything because it's an administrator. But if your membership is Rare Investing, then you'll be able to get to everything that's in Rare Investing, but everything else that's on all these. So basically, whichever subscription you have, you can see all the content that's above it. And I'm going to put the special reports all the way at the top just so that holds true. special reports you can actually see with a free library card. And I do have 2 special reports that I'm updating, one of which we're about to talk about. So everything should work out pretty easy. You can go here. Once you're logged in, that pops up. You can see what your subscription is, right? You can see what your payments are, and then you can log out, and then you can log back in. Now, for some people, it's not kicking in right away. Again, clear your cache. That's important because you have old cookies from fundamental trends on there. Clear your cache, start over. There's maybe a handful of people that I missed, but I upgraded everybody to the rare membership. So if you are a current member and you were a global trends or sustainable growth or dividend collector or retirement income options, I upgraded everybody to rare as a thank you for putting up with the update process. Again, 4 developers, took the 4th guy to get everything right. And like I said, at considerable expense because the first guys didn't get anything done for what I paid them. The last guy did everything for 1/3 of the cost of the other guys. So it was quite the process. In any case, it's all here, and I will do a little walkthrough at the end with people. I will do back and forth Zoom meetings if you're having a problem. If you weren't upgraded or your membership's not working, send me the email, and I'll double check to make sure that you're upgraded and make sure that everything's active. I suspect there's 3 or 4 or 5 people that I missed. I went through 500 subscriptions to update everything, and I cross-matched with PayPal. Everything can work. I just might have missed a few things. So if I did, let me know, and I'll work with you to get it taken care of very quickly. So let's talk about money and the world and the economy. Still, a year after I said it would be the biggest story in the world, which I said it last January 22nd, I put up a tweet that said coronavirus would be the most important story in the world. So here is the tweet that I sent out. It's January 23rd, way before anybody else was talking about this. This is a link to a CNN article, and I actually seen it in a Chinese publication a few weeks before this, when it was still a mystery disease. I put this out on January 23rd last year. I said, this is really the most important story in the world, and it proved to be. Things like this, because I was following disease X for 15 years since SARS hit Hong Kong and parts of Asia, have been very interesting to me. And disease X is the name given by scientists to what they fear, which is what all the movies are based on, right? A very viral, very easy to pass disease that kills a lot of people. So with coronavirus, COVID-19, it passes very easy, and the mutations are making it easier to pass, right? There's 2 new mutations, one out of South Africa, one out of the United Kingdom. At least that's where we discovered them. They could have happened anywhere, and that's just where we found them, are passing even easier. But coronavirus still only has a death rate of around 1%, and most of that is folks who are older and unhealthy. So it's accelerating the death of hundreds of thousands, millions of people. I had coronavirus. I had COVID-19 in September. About the 3rd day, it was like this really horrible pneumonia plus a flu. And I was like, wow, is this going to get me? And then by the 10th day, the fever had broken a couple days before that. The coughing started to subside. My energy started to come back. But for a better part of a week and a half, I had a fever. All I wanted to do was sleep, and I was coughing, so that woke me up nonstop. It's a horrible disease, but it's not the big killer that we should be afraid of. And that big killer probably comes someday. But with the way these diseases work, it's rare that you have one both that spreads easily and also kills. This one is kind of halfway, though, because it really is impacting about half of the population in a really horrible way. So your death rate, if you're older, and especially if you have health conditions, is much higher than 1%. But because so many younger people have gotten it, death rate's 1%. That's still about 4 or 5 times more than the flu. So all these people who still talk about coronavirus, COVID-19 being like the flu. Look, they're wrong. If you think that's the way it is, you're wrong. And you just have to wrap your head around the fact that this is serious. It's still serious. It will continue to be serious even after most people have a vaccine. It'll probably take a generation to really, get this down to the point where it's a rare thing. This is going to be spreading around for a long time. Coronaviruses have been around a very long time. They jump species, and it's unfortunate, but it is the way it is. And that means that a lot of the things that have taken place because of coronavirus are going to be permanent parts of our lives. Just like after 9/11, the world changed, and now we've upgraded the security, and we've had hyper reactions to each other. Some of the bans on travel that are, very racially and religiously driven, those are things that humans do. Sometimes they make sense, sometimes they don't make sense. A lot of times they cause even more division, which is a problem. And coronavirus even became a divisive political issue. I don't think it should have been, but who cares what I think on that? It did. And when you go to Johns Hopkins, you could just look at the numbers, and if you're open-minded, you can say, well, it's a big deal, right? 100 million global cases, and it's probably higher than that, right? It's probably 3 or 4 or 5 times higher than that from all the studies that we've done. It's just that those are the positive test results. And you have 400,000 deaths in the United States alone. Last March, in April and May, when I was talking about this, and I was showing you the curves from the artificial intelligence that I referenced over at MIT, I told you, I said, look, we're probably going to get to between 300,000 and 500,000 deaths if we don't mask up and maintain the social distancing. And here we are in January, and that's where we're at. So now President Biden has a big hurdle to clear because the vaccines are behind. And it turns out there wasn't a distribution plan that was very robust. It was a very sparse, difficult to navigate distribution plan that the Trump administration put in place. And now they have to ramp it up. They're hoping to have 100 million vaccines done by spring, by April, I believe it is. I hope that they do. I hope I'm one of them. And I hope that it's not an mRNA shot, but I think maybe my first one will have to be. I might have to bite the bullet and do it. I was hoping for AstraZeneca or Merck or Novavax, which are more traditional vaccines. We'll see. If I still have antibodies in April, maybe I will not get the vaccine until the other ones come out. In any case, if you're older, if you have health issues, you might just have to suck it up and get the mRNA. The reason I don't like the idea of that shot is because I know that the inflammation response can be significant, particularly if you have significant allergies. If you listen to me, you can tell that I have significant allergies, although I don't need an EpiPen. So, hopefully I don't have a severe reaction to mRNA, but my father, he uses an EpiPen if he needs to, if he gets stung by a bee. So I wonder how much more serious my allergies are than maybe I've ever been tested for. So I'll try to avoid it if I can. The bottom line is that this is still a major problem. It's going to take all year to start to get the economy back to normal. I think that we begin to see normal over the summer because of the outdoor activities. Places like Las Vegas, which I'm hoping to go to for the World Series of Poker, are going to do everything they can to mitigate risks, but most places can't afford to do that. If you take a look at places to travel around the world, I mentioned it a couple shows ago, Jamaica, if you go, they test you when you get there and you self-quarantine for a couple of days in your hotel room. And then if you happen to have it or catch it while you're there, they'll let you stay as long as you want after your reservation is up until you're well enough to travel again. That's a heck of an incentive. But that tells you how destroyed the travel industry is and the tourism industries are, which is a gigantic part of the of the economy. I don't think people really realize how gigantic tourism is, right? People from Asia want to go to the United States. People from the United States want to go to Europe. People from Europe want to go to Asia, and we want to go to Asia, and they want to go to Europe, and everybody wants to go to Africa on a safari, and everyone wants to try Australia. You know, given the resources, we'd all see the whole world, right? You know, we'd be like in Vikings, where they just jumped in a boat and said, let's float somewhere and see it. Well, great show, by the way. If you haven't watched Vikings, you should watch it. If this is to go away this year, which I think it will really normalize sometime over next winter and then into summer of 2022, hopefully we're completely back up and running as vaccines get around the world and we can loosen all the travel restrictions, then the economy should really start to move. Why do I talk about that? The answer is because the economy isn't good. You know, essentially we're in a global depression across major parts of the economy. And that means that the hiccups for the stock market could be severe. The stock market is tremendously overvalued right now. Here is something from the Bear Trap Report. Again, I get this. You can't subscribe to it anymore, so I take the liberty of showing some of their stuff. This shows that 86% of stocks are above their 200-day moving average. The breadth of the stock market in the last several months has been amazing. Amazing. Almost everything has gone up in price. We're buying a couple of the ones that haven't, that have floors under them, and still have some big upside from increasing subscription revenue, changes in energy, things like that. Take a look at this. What happens virtually every time we get breadth above 70? And we're at 86 right now. We get a correction. Now, sometimes it's a big correction. Sometimes it's a smaller correction. This is the end of 2018, and this is March. I don't think we're going to see this. I don't even think we're going to see this. Why? Just all the money that they've put into the system, right? There's a lot of money out there from the big investors. It's not so much the little investor. The little investor is the one that's going to take it on the chin here when this correction really plays out. Maybe it started, you know, the whole month of January has been choppy. Today we're down. We'll see. We'll see when things kick in. But with the economy being choppy at best, the V-shaped recovery not really here, all the other charts I've showed you illustrate that. We need to be prepared to buy things when they become available on the cheap. The stock picks I sent out yesterday, they're both buys right now today. The one stock is down a couple of percent. It's under 40, which is where there's massive support because Warren Buffett keeps buying the stock. We'll cover that in a second. But this has got to come down, and it'll drag the stock market with it. How far do we get down? I've told you, somewhere between just a little bit above 3,000 on the S&P 500, and it could go as low as 2,400-ish. I think 2,700s on the S&P 500 is what I expect at some point this year. But, you know, a few hundred points in either direction. We'll just have to watch the relative strength index, the money flows, and MACD to give us the good signals. We're already seeing the Republicans suddenly become concerned with the budget deficit. They weren't the last 4 years, but now they are. So if more money on the fiscal side doesn't get pumped into the economy to rebuild the world, as I've talked about, we need to rebuild infrastructure. We need to rebuild the sustainable energy systems. And all of that will happen, but it'd be better if we had some clarity on the outlook. But this is probably going to make things choppy. And there's going to be a lot of horse trading. And one day the narrative is going to be positive, and another day the narrative is going to be negative. And that'll generate volatility. That'll shake some people out of the market. There's a lot of people out there who made money in the last year, and they're thinking, well, you know, some of them are thinking, well, Biden's going to ruin things. He won't, but that's probably a third of the population. So you probably have some people who are just taking their profits right now. I think that's been common in January. Take a look at some of the asset allocation charts from big investors. It's clearly out there. You know, the things that the government's going to fight about will be about the transition to clean energy. Why? because a lot of politicians get paid by the oil industry and the fossil fuel industry. The reality is that the shift to clean energy, and this is Forbes, remember, this is a conservative publication. They're saying, look, the transition to clean energy is actually generating jobs. Yeah, there's some oil jobs that get lost, but the reality is that maybe a job and a half gets created. That's actually about what it is. Speaking of fossil fuels, our one and only fossil fuel investment just beat estimates, but called out the oil industry for getting too aggressive. Why does Kinder Morgan care about that? Well, they do have a couple of oil pipelines. They're mainly natural gas. But the reason we're in Kinder Morgan is because A, big dividend, B, what the market is missing is that this company is going to end up going through some sort of strategic transaction down the road. How do I know that? Because Richard Kinder's been buying up all the shares he can. And he's going to flip those shares to somebody who wants to buy out Kinder Morgan. And by the way, Kinder Morgan is a backdoor play on hydrogen. And hydrogen has a very unique role for large vehicle transportation. You're probably going to see semi-trucks on hydrogen, probably going to see ships using hydrogen. You're going to see the whole shipping industry over the next 20 years shift to hydrogen because you can't put batteries on those ships, but you can do hydrogen. And that's the way that's going to go. So oil pipelines really can't be used for hydrogen. You never get them cleaned up enough, but the gasoline pipelines can. That ended up being the answer that we asked a while back is, can you use oil pipelines for hydrogen? And the answer was no. Now you can rebuild on that same right away, but that's not cheap. A natural gas pipeline can actually be converted to hydrogen. There's a couple that are doing it right now. One right in the middle of the country. So Kinder Morgan, big dividend. The natural gas companies can afford to pay their bills because the natural gas companies are going to be around a long time. Even if they don't generate a lot of profit, they can pay their bills. We're going to use natural gas for energy for another 30 years or so, maybe a little longer. But oil, that's in trouble. And we're going to talk about that right now. You're starting to see electric charging companies pop up all over the country. Some of them are regional, some of them are national. One of our investments, Travel America, I've told you, I love that company. Why? Because they're going to be able to do this. People are going to charge mainly at home and at work and maybe when they go shopping or go to their local casino. But you're not going to see gas stations that have charging. Why? Because you have to sit there too long. It's not efficient. So the gas stations, a lot of them are just going to convert to whole different types of businesses. I don't know what they're going to become. And I think you're going to see a lot of bankruptcies of gas stations, especially all the independents, because they can't afford the environmental cleanup. I already saw a couple of those around me. Gas station went out of business, and the gas station was just gone, and the government had to assume the cleanup. What is that called? That's called a negative externality. A negative externality is when a business reaps the rewards, then the public has to pick up the costs. Fossil fuel companies are famous for that. Think about all the coal sludge all over the country. Think about all the health problems from fossil fuel burning. Those, a lot of the time, become public problems because the companies go out of business or they run away. Chevron's famous for it. Exxon too, really. But Chevron, there's some famous stories and lawsuits about them making money, then dumping all the problems on the people, not only in America, but around the world. Chevron is a serial offender. Exxon is too. And I will tell you, they're going to reap a whirlwind of legal liabilities in the next 4 years. If you own Chevron and Exxon, and you're not selling those into this rally right now, knowing that a pipeline company is warning them not to screw up the system, knowing that electric vehicles are coming, and knowing that the litigation is going to be massive, you're a bad investor. Anybody who owns Exxon and Chevron right now is a bad investor. And I will say that to everybody. You're a bad investor if you own Chevron and Exxon because they're going to do nothing but get crushed the rest of this decade. I think Exxon might have to go through a reorganization. However, I think the reorganization won't be bankruptcy. I just think they're going to spin off a bunch of units. Then one of the units will end up going bankrupt. Depends how they structure things. It'll be a good company, a real estate company, and a bad company. Bloomberg is talking about the money going into the clean energy revolution. $500 billion in investments last year, private money. So all the folks who talk about, oh, well, it's just about tax incentives, wrong, right? Use your farmers' words, bullshit. The energy transition is happening incredibly quickly. Shamath, big time investor that we talk about once in a while, one of the people behind one of the companies on our list. I don't want to give that company out because we're not done with our position, although people probably figure it out. He says the energy transition is the biggest thing happening. And I agree. Technology is the big overriding theme, but what it's going to change most is the energy system. Everything that runs on fossil fuels today, over the course of my grandson's lifetime, is going to get off of fossil fuels. It's a long time frame, but huge changes are going to happen in the next 10 years. Why? Because person by person, government official by government official, people are starting to realize how much the climate is changing. Species dying off. Where I live, we haven't had a blizzard this year. It hasn't been below 10 degrees even. That is crazy unusual for Wisconsin, and I'm not sure that it's happened in my lifetime, that coming up on the end of January, we haven't had days that are around zero or a blizzard. As that realization takes hold of more and more of the population, and it's already well over half of the people understand it, it's around 70%, the transition to clean energy is going to happen faster and faster. We already can see the plug-in vehicle sales are starting to ramp. Is this chart not enough for you? Plug-in hybrids are growing and hybrids are growing very fast. Some of them are hybrids, some of them are pure EV. Hybrids had a good year last year. We're looking at a hybrid, but I almost think maybe skip it. I don't know what to do about buying a car later this year. Right now, we just have the one vehicle because we never leave home right now. But at some point later this year, we'll get a second vehicle. And we've been looking at the Toyota RAV4 as well as the new Venza. They're both plug-in hybrids. I believe the RAV4 gets a tax break, but the Venza doesn't. I'm not positive. But if this is not a self-explanatory chart about the trajectory of electric vehicles, I don't know what is. It's coming. But 2025 is the demarcation year. A couple things happen in 2025. First off, the mileage requirements go up. Second, we will be into the second or third year by then, but probably the second year of a new generation of batteries. The factories are starting to be built. Supply chains are actually starting to move back to America. We have catch up to do, but the technology for the million-mile battery, it exists. It's not ready for manufacturing, probably take another year or two. Then you got to build everything. But by 2026, I will make this prediction. Gasoline-powered vehicles will be falling off a cliff for sales, falling off a cliff. And EVs will be going almost straight up. We already see the ramp. This is nothing compared to what's coming. By 2027, just a year later, I would expect that you will see EVs outselling gasoline-powered cars. By 2030, there will be almost no gasoline-powered cars being sold. Why? Not only the technology making the EVs a better buy, governments around the world basically saying if you want a gasoline-powered car, you're going to pay a massive fee to the government up front, not over time. Not when you buy gasoline, but you'll pay it then too. The laws are already being written. They're already in 15 countries. 15 more are probably going to pass any month. The United States just rejoined the Paris Climate Accord smartly. Why smartly? Because of the jobs that we just covered. Because we want those supply chains to move to America. Why? Well, there's 5 projects right now for getting more lithium out of the ground in America. There's a few that are active. And we also have the ability to process lithium again, coming online this year. There's a new battery technology, the one that is for the million-mile battery, but really there's 2 technologies for that. One involves silicon. You need to get out of fossil fuel stocks. I just want to tell you one more time. I'm putting out the report soon. And this is where we're looking for a lot of investment ideas. I have several. One of them's already on the list. And really there's a few that are on the list. SunPower, I was pounding the table for SunPower early last year. Quite a few of you, who owns SunPower? How many of you made 300 or 400% on that? Had to be almost everybody who bought it. Tom says 5-bagger. right? Because when it dipped down to in the sixes, we made sure to buy it. All these people saying that. Now, I think that it's overbought right now, and if you're a trader, you probably want to trim around the edges and then hold that money to buy it back a little cheaper. I think that SunPower can get back down into the lower 20s. If it does, I'm going to buy a bunch of it because it'll probably be a 5-bagger from there. I don't know if it'd be a 10-bagger from the lower 20s. It would probably be a 5-bagger. I said that about Exact Sciences, over a decade ago, and people laughed at me. When Exact Sciences was $1.65, I said, this is what's going to happen. Why? Because the path was clear. People don't like following a path because once they look forward and it goes around the corner, they're like, oh, did the path just end? Did it fall off a cliff? Got to have some foresight. But once certain hurdles are met, then the rest just is ramp up. So those early hurdles, I understand why you don't want to invest in a $1.65 stock like I did. But once you get past some regulatory hurdles and some manufacturing hurdles and things like that, you go, wow. Once they get past that spot where the failure risk is high and they're just growing and they just have to keep up with their growth, goes to the roof, right? What's Exact Sciences right now? $140 a share. I don't own it anymore. I dumped it in the 70s. I only made, 50 times my money. But I'm dumb because I missed the last double. It's tradable stock, though. Tradable stock. And in our Swinging for the Fences articles that I'm going to be pretty religious about writing from now on, we're going to have 1 or 2 ideas every week where you can trade those if you're a rare member or if you're on margin of safety investing. Either one. Lithium up 126% last year. Now, on a pullback, we'll probably want this. We don't want it right now. There are some stocks that I really like. For real estate investors, sustainability comes into the equation too. There are major things going on with real estate. Take a look at Brookfield Asset Management. Take a look at some of the REITs that I added to our list. When I add something to the list, it's not just because it's good stock. It's because there's something extra that the market's missing. And 70 to 80% of investors have no idea what they're invested in. And just invested, well, I feel like this one's going to be pretty good. They have no idea. Which is why I tell people, if you own more than 30 stocks and you don't have a staff and all the resources that I have, you're out of your mind. You cannot keep up with more than 30 stocks. And I think most folks can't keep up with more than 20, without hiring somebody like me through a letter or a couple of people like me with letters. There's just too much research. I have 2 analysts and an editor now, 20 services I subscribe to, and probably another 20 subscriptions. When I disappear from the chat room, it's because I'm reading. Because that's all I do. I read 50, 60 hours a week for you, just so I can build layers and layers and layers of knowledge. And I'm cheating now. I admit it. I cheat now. I use an AI. I use an artificial intelligence to help me. The next person I hire will probably be some sort of AI programmer, because that's the direction that finance and in all its various forms is going. And that's the way manufacturing is going. All of industry, cars, everything is going AI. And AIs are developed for specific purposes. So we're probably decades away from Skynet destroying us. However, between now and then, it's going to be pretty neat. And there's a lot of investments out there. One of the big investments out there is going to be how we use real estate to fix the environment. And that's in addition to how we use technology to fix the environment. Those 2 things are going to be massive income generators and growth generators. So some of the REITs that we added are a play on this. They have something that the market is missing. And that's the new series of articles for this year. What is the market missing? What's the market missing with AT&T? What's the market missing with Sirius Satellite? What's the market missing with Liberty Sirius? And again, you've seen me have more interest in real estate in the last year. Not only to buy it privately and get a second property, which I think is closer than I maybe anticipated, but the wealthy are buying more real estate. Why? Because there's going to be inflation, whether they tell us that it exists in CPI or not. And what's inflating? It's asset prices. We want really good real estate. The type of real estate that can be developed or redeveloped, as one of our REITs does, into something that generates much more income and a higher price for the next entity to buy. And you, in your city or wherever you are, look around at your real estate. Don't just buy something because it's out there. But if you can find something that at 50% occupancy would pay for itself, and you think you can do better than 50% occupancy, this is my rule, then maybe you should consider buying it. There's a couple of different things that I'm looking at. I don't know which one is best for me, one that I can handle management of, or maybe live in and operate out of, or Airbnb. I don't know. I'd like to own 10, 20. I'd like to have a whole portfolio, but that's going to take me the rest of my life, and then I'm just going to pass it on. Hopefully. Hopefully I don't blow things up again. Because earlier in my career, I've blown things up, and I've learned from that, and you should too. And somebody says, I'm mad that I didn't buy more SunPower at 7. Don't be mad. Be glad that now you know that if you do the research and you understand an idea, it's okay to start scaling in. Don't be afraid. Say, okay, this makes sense to me. I'm going to take my 1% starter position, or 0.5%, depending on how you do things. Some of those opportunities are in the SPAC market. Now, I will say this. I think 80 to 90% of the SPACs are not going to work out. A lot of them are just going to give investors their money back, and that's an important thing to understand about a SPAC. They almost all IPO at $10, and if you can get a SPAC around $10, understand something. If they don't make a deal, you're going to get most of your money back. Why? Because the money's held in trust. Fees will have come out, but your downside of buying a SPAC between $10 and $11.50, which is where most of the warrants are priced, is very low, 10-ish%. But the upside is huge. Remember, we talked about Nikola before it became Nikola. We talked about the company that became MP Materials before it became MP Materials. Both of those went up by triple within months. So understanding the structure of the SPACs, which I explain a little bit in one of our stock picks, should assure you that you've got some downside protection. Now, if the company makes a bad acquisition, now you better decide quickly, do you want to be a part of it? And I believe in most cases, you can even vote to just take your money back if you don't like the acquisition. But that almost never happens because almost every one of these goes up, at least initially. Why? Because the executives know they have to do something that makes them money. Otherwise, it was all for naught. 2 years of looking for a deal and not having a deal, or a bad deal, means that they made no money for 2 years. So if nothing else, you get a hype pop in most cases. So one of our SPACs, the one that I recommended this week, and I'm going to actually talk about on air, I don't do that normally, is an awfully good buy in fintech, and you can get it for under $11 a share right now, this minute. I think you should all take a starter position today. You know which company I'm talking about. I won't give the actual name on the air. It's a fintech. The guy running it is a big deal. His CFO is a big deal. They're connected to everybody. And the quote that I put in the article is about Jamie Dimon. And he talked about how fintech and blockchain are something that the big banks have to be afraid of. So what does that mean? That means that certain fintech companies are going to really do well, and then the big banks are going to buy them. And the SPAC that I recommended yesterday, the guy who runs it's connected to everybody. He's going to buy something that JP Morgan or Morgan Stanley or Goldman Sachs or Citigroup wants, and they can't buy it in its current form. So the SPAC acts as a middleman, takes it over, brings it public, de-risks it, and then the bank will buy it for more. On the flip side, Kathy Wood and I have been aligned for years now. She has some ideas about what's going on with the economy. The problem with buying ARK Investments right now is that it's so inflated that any correction there is going to be amplified, particularly for their top stocks, which could get sold off in a correction, and as people sell their ETFs just to raise cash, especially if there's margin calls. So any correction over about 5%, you get margin calls, pretty significant margin calls. And then it spirals down until the big free cash flow money from the big investors starts to scoop up things on the cheap. And those spikes down, I'm relatively convinced are going to continue to be fast, lasting only a month or two. I don't know when we're ever going to get a year-long bear market again. I think that you'll see periods like 2015 and 16 where the markets chop for a couple of years, but the big sell-offs are going to be fast. And on those big sell-offs, you want to pull out your plug and play list and say, okay, well, I've read up on these companies. These are the ones I want. Several of the stocks are in her funds. One of the stocks I recommended yesterday is going to end up in her space ETF. So one of the stocks that I recommended yesterday is going to end up being in her space ETF. You want that stock right here. You want this one. It's a play on growing global subscription revenue and the reopening. You're also going to want some cryptocurrency if it pulls back. We talked about buying Bitcoin under $10,000 a unit. And if Janet Yellen doesn't submarine it, and I still think the odds are that she does, but if there's a bigger sell-off in cryptocurrency, has dropped a lot in the last couple of days, you're going to want to take 1 or 2% of your bank reserves, your bank savings, and put it into Bitcoin. You don't want to use the grayscale funds because the fees are huge. You're just going to want to learn how to use a Bitcoin purse. And I'm going to have an article about that with a link to how to do it for those of you who want to take a couple dollars from your bank, 10, 20 grand, depending on what your bank reserves are, maybe 1,000 or two. Again, 1 or 2% of what you have in the bank. So I guess, it wouldn't be 10 or 20 grand. For a lot of people, it's going to be a few $1,000s. That's all you really need in Bitcoin. Why? Because if it goes to a zillion, right, because of hedging inflation or whatever reason, then you make a lot of money. And if it goes back down to 1,000, and I've speculated that the equilibrium price is around 1,600 or 1,700 in a regulated commodity-like market, which is what I think is going to happen. I think Janet Yellen and the Securities and Exchange Commission are going to make sure that it's regulated like a commodity. And if it's regulated like a commodity, it's not worth anywhere near what it's trading for right now. And it'll be wildly, wildly volatile because of futures. You already know that unless it's a stable coin, it's not going to be allowed inside the normal banking and financial infrastructure. That came out 2 weeks ago, and that was actually a Trump proclamation, his Office of the Comptroller of Currencies. But I think they're all on the same page. If Bitcoin survives, it'll be like a commodity. It'll trade like a commodity. Very sharp ups and downs. All right, so I'm going to not take any questions today on air. I'll take a look at the chat in just a second, but I am going to walk through how to use fundamental trends when we stop here. So take a look at the articles on fundamental trends for the last week, the buys, taking profit on Invesco, the chart books. These are all up to date. And again, don't ask me if I'm going to raise the buy zone on something because things changed in the last week or two. I would refer you to that very first chart that I showed you today. The market is severely overbought. Too many stocks are above their 200-day moving average. That has to pull back. Stock market's down maybe a percentage point today. Maybe that's just volatility. Maybe that's the start of something. We'll know later. All right. Have a great weekend. All right. I'll talk to you soon. Keep an eye out for 4 or 5 articles every single week.